Hello and welcome dear traders and investors. I'm glad to present the daily market review prepared by analytics and experts of fx.co portal. Here we go. Today is Friday, January 13, and we're starting from Paulo Greco's simple trading plan for euro-dollar pair. EUR-USD continued to trade rather impassively, but that all changed when the US published its inflation report. US inflation dropped to 6.5%, which caused the dollar to fall quite rightly. Unfortunately, today's trading does not clarify the technical picture at all, since it's still difficult to form a channel or trend line on the 30-minute chart. In general, this situation is still quite confusing, although we seem to have a clear uptrend. There are still many questions about the euro's current growth. The pair started a new upward movement on the 30-minute chart. There were quite specific reasons for the pair's growth, but in general, there are few of them and the market is not willing to enter a bearish correction. Paulo still believes that the euro should fall significantly, but the market shows that it's not ready to sell and uses any excuse to buy the euro. In between, they enjoy a flat. On the 5-minute chart, it's recommended to trade at the levels 1.0657, 1.0697, 1.0736, 1.0787, 1.0837, 1.0905, 1.0923, 1.0966. As soon as the price passes 15 pips in the right direction, you should set a stop loss to break even. On Friday, only the EU Industrial Production Report and the US Consumer Sentiment Index from the University of Michigan will be released. Not the most important data, but the euro can rise without it. Trading from resistance at support levels, Jakub Nowak with GBP USD. But first, let's have a look on 5-minute chart for analyzing the transactions in the GBP USD pair yesterday. Pound tested 1.2169 three times on Thursday. The first one was when the MACD line was quite far from zero, which limited the upside potential. The second one was when the MACD line was already recovering from overbought area, which seems to be a good signal to sell. It resulted a price decrease of about 40 pips. The last test came when the MACD line was moving from zero, which accompanied by the latest US inflation report. That was an excellent signal to buy. It led a rise of about 70 pips. A number of UK reports are due out today, which could lead to a spike in volatility. The first thing to look out for is the GDP change in relation to the previous quarter, which is expected to decline. This will put even more pressure on the pound. The manufacturing and industrial production reports are also projected to be pretty poor, while the trade balance figures will be ignored. If the pound manages to stay afloat despite all the negativity, there will be another attempt to move upwards, especially since US reports in the afternoon, namely the Consumer Sentiment Index from the University of Michigan and inflation expectations, are likely to weaken demand for the dollar. For long positions, you can buy pound when the quote reaches 1.2206 and take profit at the price of 1.2257. Growth will occur with the upcoming UK data is good. However, make sure that MACD line when buying is above 0 or is starting to rise from it. Pound can also be bought at 1.2163, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.2206 and 1.2257. For short positions, you can sell pound when the quote reached 1.2163 and take profit at the price of 1.2104. Pressure will increase if the UK reports weaker than expected economic statistics. But make sure that when selling, the MACD line should be below 0 or is starting to move down from it. Pound can also be sold at 1.2206. However, the MACD line should be in the overbought area, as only by that will the market reverse to 1.2163 and 1.2104. We've got a trading plan for gold in the medium term, Petar Yukimovic reports. Gold has been trading upside as expected, and the price has reached the first upside objective at the price of 1900. Anyway, Petar sees potential for further upside movement due to the strong upside momentum. Due to the strong upside pressure and the breakout of resistance zone 1900, Petar sees potential for the further upside movement towards next upside reference. Watch for the potential buying opportunities on the intraday dips with the upside objective at the price of 1950. MACD oscillator is showing fresh upside momentum, which is a strong sign that buyers are in control. Key support is set at the price of 1900. The next in line is Lowry Bailey with the trading tips for AUD-USD pair. The Australian dollar rose 61 pips on Thursday due to good data on lower US inflation. The 0.7048 target level is about 80 pips away. It's possible that the price will reach that level, but possible divergence from this level will be much stronger than the one from the current levels. This morning's figures from Australia and China are pessimistic. Home loans in Australia fell by 2% over the month. Real estate investment fell by 3.6%. China's trade balance for December increased from $69 billion to $76 billion, but at the expense of a strong export decline of 10% year-on-year. As a consequence, we expect the price to settle at the support of 0.6917. Consolidation under this level, which will not happen today, will open at the next target level at 0.6800. But for now, we are watching the development of moderate growth. On the 4-hour chart, a price divergence has formed with the Marlin oscillator. The general trend is still growing. After the end of the correction, the price can rise to the 0.7048 target. That's all for today. See you next time. Good luck.